Hi, everyone. Welcome to the show. This is Sheila Warren from the World Economic Forum. Listen to what she has to say.
Sale level. I think that the big one is the one you mentioned. It's really looking at the ECNY and kind of saying when China really takes that massively outside of Chinese borders, defined as you see fit, depending on who you are, then I think we're going to really see, lift off. And so already, whether it's Belt and Road, whether it's Chinese investments into Africa and infrastructure, there is a lot of press earlier about, the debt trap. A lot of India and Zambia and others really trying to say, look, we don't want to get stuck in this debt trap with China requiring us to basically take out these loans using digital yuan, and then we're suddenly in this system we didn't necessarily want to be part of. So there's a lot of activity going on there. I will be candid. I don't think it's getting the attention in the West that it deserves. I think that there's just so much going on right now. I mean, who could fault anyone for not having a finger in every single thing that's happening in crypto around the world? But this is one that I think is going to start getting a lot more attention, particularly as China moves beyond its borders, which it's already done, but really starts to scale that extra territorial activity with the digital yuan. And then I think we're going to see a lot more attention being paid.
So China's Belt and Road Initiative was loans to developing countries to build out infrastructure, build up the economy, etc. And what's going to happen is those countries are going to have to pay back China with the ECNY, the digital yuan. So this is kind of like an attack on the reserve currency. So as China starts expanding across its borders with the ECNY, the West should be paying attention to this, yet we're not really paying attention to it. And that's what Sheila Warren is saying with all of this. So I found that pretty interesting. Now, this is a Harvard article that talks about corruption with, some of these loans that happen, as well as just economic aid, like, for example, Ukraine, right? So what ends up happening is a lot of these countries, there's corrupt people in the countries, and essentially what we do is we send them, a pile of cash, and a lot of that money gets stolen and corrupt people take money from that. So digital currencies are really good use case for economic aid because there's going to be receipts with every transaction that happens. So I just wanted to mention that. Now, this is Doug Casey. Listen to what Doug Casey has to say.
Decades, but now it's gotten to a critical level. Look, from the most basic point of view, the U.S. government itself is bankrupt, terminally bankrupt. It can't dig itself out of the hole. In fact, it's digging the hole deeper. The official $31 trillion deficit is being added to at the rate of $1 trillion and a half a year. So everybody knows, certainly sophisticated people know, that the dollar is a hot potato. And the main thing that's holding the dollar up is the fact that its major commodities, oil, which is the world's largest traded commodity, are priced in dollars. But if the Saudis and other countries start accepting the yuan instead of the dollar, then what do people need dollars for? This 20 trillion, nobody knows for sure, but that's a good estimate, US dollars outside the US. Right. And if people don't need them to buy commodities, well, they don't need them for anything. And they're going to start unloading them. So, yeah, this is a really dangerous situation. And it's not just the Saudis. It's the Nigerians, who are major African oil exporters, are doing the same thing with the Chinese. The Nigerians, the Saudis, don't buy anything from the US, but they buy lots of stuff from the Chinese. So it's perfectly logical.
And to that point, I just want to bring up a quote that was in the Wall Street Journal. They were the first to break this report, that the oil market, and by extension, the entire global commodities market, is the insurance policy of the status of the dollar as reserve currency. If that block is taken out of the wall will begin to collapse. So exactly what you were saying, Doug. So if the US dollar's, role and dominance as reserve currency is coming to an end, I mean, what replaces it?
Well, that is a $64 question. I think what's going to happen is that we're going to go back to gold. Look, even the Chinese and the Russians, who are closer now than ever, do most of their trading, I understand, with US dollars, which is crazy. They have to clear those dollars through New York, the homeland of their enemy. You don't use the enemy's currency, for God's sake, or the adversary's currency, if you wish. It's best that they use a neutral currency, one that can't be inflated out of existence, one that can't be closed down at the discretion of some half-crazy pals in Washington, D.C. I mean, Russia's had all of its dollar accounts confiscated or put on ice, as it were. So any country realizes it could happen to them. So the U.S. is shooting itself in the foot by trying to punish the Russians.
And hold that thought. I want to get back.
All right, so the first thing that I wanted to bring up is this quote. It reminds me of Bearable Guy's riddle. If that block is taken out of the wall will begin to collapse. And that's the wall with Bearable Guy. So I thought that was funny. Just wanted to mention that. So the whole thing with this, right, is Russia and China, why would they want to use dollars between trade with each other, right? So they're using dollars for trade right now for China to buy the natural resources, for Russia to buy the manufactured products, as well as what he was saying is this is expanding outside of that too, with, you know, places in Africa are not even, there's no need to use the dollar. They're using the yuan for oil, as well as Saudi Arabia said that they're going to price Chinese oil in yuan, as well as today India has announced that they're buying oil from Russia as well. So there's a lot of reasons why you would want to use a neutral bridge asset in these cases, which a neutral currency, which Doug thinks is going to be gold, which I have my doubts that it's going to be gold. But even if it was gold, right, the protocol is what is important for these transactions to happen. Are we going to recreate the correspondent banking system with gold? Like, that's a very clumsy system that they're describing, where gold's held in vaults and you pretty much have an IOU to the gold. And what he talks about later on is he talks about, you know, gold is an asset that has no liability. So, you know, if I have a mortgage or something, that's a liability of me, and it's an asset to the bank. And gold doesn't have that relationship. Gold is a commodity, but so is crypto. Crypto doesn't have that relationship, right, with as it being a liability as well as an asset. So crypto is an asset in itself without the liability factor of this. So the other thing is the escrow, right? So credit creation is needed. So this is why the gold standard didn't really work that well, is because there needs to be credit creation. Now, some will argue that mining gold out of the ground is a source for inflation. That's where they get 2% from, is because that's the average amount of inflation that happens with gold. But with 100 billion XRP being released, that could be used as credit creation, right? And we're seeing that with Ripple Lend and everything. So I think, you know, this ecosystem has a lot of potential. Now, the next piece of information is Rosie Ria. So listen to what she has to say.
How do you see the investment landscape when it comes to cryptocurrencies and digital assets?
Yeah, you know, I actually led the Future of Money initiative when I was in Treasury. And you know, at that time, way back when, you know, there was this fear that some of the bigger technology companies were going to kind of take over how people bought items, how people, you know, put their kind of money on the internet, et cetera. And there was a lot of fear about the future of coin and currency. There's a lot of fear about the future of regulation, how you manage this, how you follow this, and certainly, you know, fear of kind of illicit financing, terrorism, and financing initiatives that might, you know, kind of spur this underground world. And so, you know, the way I think about crypto is probably more important about how I think about blockchain, right? So blockchain is the underlying technology that supports cryptocurrency. I think blockchain is here to stay, right? So whether, you know, I'm not a big fan of kind of the floating assets of crypto, kind of let the market determine what that's going to be valued. I do support, digital assets that have a functional value. I do support digital assets that are backed, and so when I think of even blockchain in and of itself, whether it's fractional ownership of real estate or art or NFTs, tokenized items that can be sold, that is always going to continue no matter what. Now, that being said, there is, you probably have heard this, there is certainly conversations about what the administration is thinking about in terms of central bank digital currencies. It is likely that soon the administration is going to make an announcement. They're going to study this further, that all the impacted regulating stakeholders will come together and study kind of what the impact of what a central bank digital currency might look like and what their respective agencies' roles could be when it comes to crypto regulation. And look, I think that's healthy. Thank you. It should be studied. There should be some guardrails put in place. And these are kind of the balances that I think any administration has to go through that thinks about innovation and technology. But, I'm excited about what Unicorn Hunters is doing.
So Rosie Ria was once working for the U.S. Treasury, and now she's a Ripple board member, and she's critical towards a lot of cryptos, the free-floating assets, as she's referred to them as. But at the same time, I've seen her tweet about XRP. She's on the Ripple board. So, this person that worked for the U.S. Treasury that's critical about crypto, yet, she's in favor of XRP, as well as she's talking about the president's executive order. And she thinks, there should be some guardrails up, and this is what's needed to push for regulations to happen in the United States. So this is Ashish Burla. Listen to what Ashish has to say.
In 2021 with RippleNet, we ended the year at a $10 billion run rate in terms of volume moving through RippleNet as a whole. And we're in 22 destination markets with on-demand liquidity. And that was a core piece of feedback that we heard from customers. They want that product, but they want it in more destinations. We're close to having global coverage of ODL, which is super exciting.
What benefits have RippleNet customers seen by using on-demand liquidity?
It's a couple of things. Number one, it's more capital efficient to use ODL. And historically, it was a problem. But as interest rates increase, as we are potentially going to see in the United States in 2022, the cost of capital is also going to increase. And the savings you get in terms of capital usage with ODL is going to be even more substantial. That means that our customers before ODL had to pre-fund using expensive capital in the destinations. With ODL, they no longer have to do that. Number two, it's faster to move money with ODL cross borders, so you get that speed increase. And then lastly, as we talked about earlier, the price in terms of sending money cross borders continues to go down as crypto liquidity goes up. And again, these are three really, really good sort of trends that are working in the favor of the value proposition for RippleNet's on-demand liquidity product.
You made a
All right, so recently the Fed raised interest rates to 0.5, right? They're at 0.25, and they added an additional 0.25%. So in the correspondent banking system, when one correspondent has to move money to another correspondent, there might be borrowing involved where they have to collateralize a debt obligation, and when doing that, they have to pay interest on whatever they borrow. So that 0.5% is money that the correspondent is going to have to pay just because they might not have the liquidity in that area of the world. And I know a lot of countries, they have much higher interest rates than the U.S. does. So just moving money across seas is going to get more and more costly as interest rates begin to spike. And we're facing 10% CPI inflation, which means the Fed should be raising interest rates to 10% to equal out or 8%, right? To equal out the 2% inflation rate that they're supposed to have. So, we're in this environment of instability, and central banks, their tools are to lower and to raise interest rates and QE and stuff like that. But when they raise interest rate, that's going to put a lot of stress on the correspondent banking model. And why wouldn't you use a bridge asset that's very cheap to use, and you don't have to worry about borrowing against capital? You just have the fiat that you came in with, and you send the bridge asset, and it's quicker, faster, and cheaper. So the next piece of information is iTrust receives their operating license from the Central Bank of Portugal. And it looks like iTrust was bought out by Elrond, and Elrond's a layer 1. They're EVM layer 1. So EVM means Ethereum virtual machine. And pretty much what that does is, a lot of people kind of like mirror what Ethereum does, and they use different consensus mechanisms to make it quicker. So whenever you see EVM, that means that it works on the same type of operating system as Ethereum, but it's probably, built to scale better than Ethereum, because most of these are proof of stake and DAGs and everything that use EVM. Songbird, Spark, those are examples of EVM chains, but they have different consensus mechanisms to make them quicker. So I found that pretty interesting. Elrond gets approval from the Central Bank of Portugal. Now the next piece of information is Instamatch. Right, Instamatch, it says key partners, Algo, Fides, Futura, R3 Corda. And what's interesting about this is it looks like Instamatch has 200 institutional clients across 26 jurisdictions. So that's pretty big news. I've seen the partnership with Algorand in the past, but Instamatch seems like a pretty big platform. Now, I don't think Algorand is the settlement vehicle on Instamatch. I think they have a different use case other than XRP, but I found it pretty interesting, so I just want to share that. And this is this guy is an analyst for Bank of America. Listen to what he has to say.
On the right, you can see a number of private companies that are up and coming. And to put private companies into perspective, over the next 3 years, you're going to have a lot of public options in this space to invest in. The reason why I think that is that this year alone, $20 billion of VC funding is going into this space. That's up from $3 billion last year. And I think it's going to be higher next year based on the VC funds that are accumulating money to invest in these private companies. And as I mentioned, there's hundreds, if not thousands, of applications being built on these ecosystems. Again, many of them aren't going to make it, but all of these are asking for, a certain amount of funding. And you're going to start seeing people come into the public markets. It's going to require work. Everybody has to do their homework themselves to figure out, is this going to be Amazon or pets.com? For our clients, we're creating an investment framework to try to understand that, so that they can invest there. But that's what's really critical here. And here are some of the companies that are, really up and coming. Almost all of these have a private value of over $1 billion. So they're almost all unicorns. I'm now having to start calling things dragons. That's, for those that, don't know, I didn't know, are private companies that have a valuation of over $10 billion. These guys are gonna, one day be available to us in the public markets as well. So, and this is only, a small list of the companies, but these are the unicorns and dragons that are already existing today.
All right, so this whole lecture was pretty interesting. I'll add in the link in the description below, but if you didn't notice, there's Ripple, there's Fort, that's also a Ripple investment. So, this whole thing was pretty interesting. I'll add in the link below. Please tell me what you think in the comments below. Please like and subscribe. I hope everyone enjoyed. Thanks, everyone.